up on the Money Gang. Tax season.
Oh, tax season, yeah. Look at that. You know the alternative minimum tax, the number of people who have to pay that every year is going up.
Yeah, and it continues to creep. Well, it doesn't creep. The problem is incomes move up.
Right, and it doesn't adjust for incomes moving up. It's been, the AMT, as we call it, it's been in effect for more than 30 years, and it was initially created as a tax for the wealthy, but because of this issue about not being taxed for inflation, a lot of middle-class taxpayers are now involved in that.
Robert Johanson is a certified financial planner at NBS Financial Services. He joins us now from Los Angeles. Welcome to the program.
Thanks a lot.
This is an issue that the people who aren't familiar with the AMT may be finding out about this year, or if not this year, some year down the road. Tell us why this is affecting so many more people.
Mainly because of the compression in the regular tax rate system. What's happened in recent years is the regular tax rates have declined quite a bit, and the alt-min rate has not changed. The exemption really hasn't kept up with inflation. There's an exemption that one gets against the alt-min tax calculation, and that really needs to be adjusted.
Well, walk us through this. What is the alternative minimum tax anyway? I mean, why have I got two tax codes or two ways of filing my taxes?
Well, Ollie, I usually try to start out by explaining that it's a parallel universe sort of to the regular tax. It runs side by side, but there are differences. Basically, it starts where most people leave off, which is at taxable income, but then you have to add back certain adjustments which are not allowed under the alt-min rules, largely state and local taxes, home equity loan interest, miscellaneous itemized deductions, incentive stock option gains, municipal bond interest on private activity bonds, things like that.
There's some consensus that this is creeping continually into a group of taxpayers that this tax was not intended for, yet there's the irresistible lure for the politicians that this is revenue that they don't know where they could get if they took the AMT out or made some sort of changes to it. What do you see happening here? Does this just continue?
Well, there hasn't been a big constituency for change in this area. That's really been part of the problem, but I think there's going to be quite an awakening here in the next year and 2 years, because you're going to find far more taxpayers are affected by this. The Wall Street Journal had an article earlier this month which basically laid out at different income levels how many adjustments or preferences one would have to be falling into alt-min. And it's surprising, it's as low as $25,000 to $30,000. And people that live in high tax states, counties where they charge a lot of property tax, they may have a lot of employee business expenses on their tax return, or even have more than average number of children, are going to find themselves being affected by this tax.
Robert, a lot of people are using e-file to file their tax returns. A lot of people are using software. Some people still do it the old-fashioned way, and other people go to tax preparers or accountants. Obviously, if you go to a tax preparer or an accountant, they'll catch this for you. They'll know that you fall into the alternative minimum universe and need to file that way. The onus is on the taxpayer to figure this out, and how do they do so?
Well, that's true, and a lot of this information is pretty subtle. It's not necessarily obvious to the taxpayer. If you look at the tax form itself, there are nearly 30 items of adjustment that go into calculating this tax, which is a very heavy burden. It's just grown up over the years that way. One of the things that I point out to my clients is that one of the benefits they get from a tax professional is we are very good record keepers, things that most people don't like to do. The insidious thing about this tax is it doesn't necessarily affect a single tax year. It has a roll-forward effect in many cases where you have to keep what amount to two separate sets of books to keep track of income and adjustments related to this tax. So you'll find that something may not come into play this year, but it'll come into play a later year. Things like basis on assets that you're selling, alt-min tax credit carry-forwards, net operating loss carry-forwards. These are all things that underlying records have to be kept on, and the average person generally gets lost in that sort of detail.
Rob, thank you for joining us to talk about this.
Okay, thank you.
Rob Johanson is with NBS Financial Services, an accountant with that firm specializing in tax matters.
Coming up.